Hey, this will be a video chart on ACLH. I think I did this one before, but to be honest, I can't remember. Either way, had a very nice day today, especially in the volume department. Biggest volume it's had in a very long time, just over 112 million shares. And good part about the volume was you got some nice price reaction with it. Was up much higher than where it closed, but I would attribute this wick here, the upper wick, to just profit takers getting out from the people that were probably accumulating on this pullback. Especially yesterday, you probably had quite a few chart people get in. I'll explain why yesterday, and then they were just taking their profits off there. But overall, closed up nicely, up 24% on the day, so it was very nice. And if you can count from where it closed yesterday, it was up 70%. So up 20%. 24% from where it opened today, and up 70% from where it opened or closed yesterday. So any way you want to slice it, very nice day. So let's just kind of get into the chart here. Real quick, let's go over what happened, and this will kind of explain why I think what formed this part of the candle here. But we had this big move here, and then we had just a typical pullback here on less volume, had another nice move up, and then had the pullback here the past 3 days. The good part about the pullback was if you look down here at the volume, it was on decreasing volume. And if you watch my videos, you know that I'm a big fan of pullbacks on decreasing volume because that shows that there's no major dumping or anything like that going on. It's just simple profit taking, and as long as support levels hold, then things are good to go. And support levels did indeed hold on this one. So the first area where I'm guessing the chartists and so forth bought today was, or yesterday, was right around this area here at the blue line. This was a 10-day, and then very confident that people were nibbling down in this area because we had the 200-day simple moving average here, which is this orange line, and that's always the key area of support. It's a good risk versus reward scenario, so I'm sure people are nibbling at both of these areas here. And so if we kind of box this in, this is where people were more than likely really starting to nibble. And then these same people, my guess would be the people who were locking in profits there. And good for them. That's part of the game. If that was their strategy, they made a nice trade. But now I know there are a lot of people in this for kind of more of the overall chart perspective. So I want to kind of talk about that in terms of what we want to see hold. This previous green line here, I'm pretty sure was kind of the key area that we didn't want to see fall, and that remains the case. But what I'm going to do now is just delete that and picture this orange line here as the new must hold. If this chart is truly strong, and if this whole move is truly strong, then this 200-day orange line shouldn't have any problem holding. It should provide the same results as it did before. If the price pulls back here, then it will hopefully repeat what it did there, and there'll be a bunch of buyers there, and you'll get another bounce up, hopefully through a higher high. So maybe maybe this won't even get tested, but I get a lot of questions of what's the key area that we want to see hold, and that is now this 200-day simple moving average. It's proven twice here, and then once more that it can hold, and that needs to continue to be the case, especially while these other moving averages try to catch up to where the price is now. In terms of resistance levels, really the resistance levels are kind of staggered here. You have one right here where the people decided to lock in profit, so this becomes an area of resistance. I'm not going to leave it a skinny line just because I don't think it's going to be a huge level of resistance if the price gets back up there again. That level is valued at 0.058, and then after that you get towards kind of what I'm just going to do is call this a resistance zone, because you could make either of these a resistance level and you wouldn't be wrong. So instead of create an argument, we'll just call this here area up here the resistance zone that the bulls are going to need to fight through if you want to get a nice blue sky breakout to higher levels. So the resistance zone is made up at the top of it with 0.073, and then the bottom of it's at 0.07. So these will be the two key areas of resistance. Once more, I don't think that one's going to pack too much of a punch. But I would expect this area would be kind of tough to get through. But the good news with that is when resistances are tough to get through, if the bulls can get through them, then that usually produces nice movements upwards. So that's kind of the pro of that. The con being, there'll probably be quite a bit of people up here trying to hold it down. But if the bulls can push through, then it could be off to the races again. So this is where the chart currently If there are any other questions on the chart, please let me know. If not, I'd encourage you to check out bullwarriorstocks.com. If you go there and sign up for the free newsletter, you'll be sent a free ebook, and with your newsletter subscription, you'll get chart setups, trade ideas, educational pieces, all sorts of things from big boards down to penny stocks. So there's a good variety, something for everybody. And it's all free, so it's worth at least signing up and giving it a try. We've been making some good money together, so I'd encourage you to head to the website and sign up. Once more, this was ACLH. Thanks for listening, and enjoy your rest of the day.